Welcome back to my channel, and today I'm going to review a FOMC price action and how I made 3RR trade using the confluences. So in the morning I didn't even bother to trade as today we had FOMC at 2 p.m. and we had Federal Chairman Warsh speaking at 2:30. But we did have a pretty good, decent amount of price action in the morning. So we took out this recent high. As I've told you guys in the previous sessions, when we are going down, price likes to get some sort of a liquidity on the top before we drilling down. And after we took out this high, we took out this London low by 10 p.m. or 10 a.m., 10 a.m. And once that was taken, there was a lot of just noise from morning to FOMC. But if we look at this price action, we do have this breaker, this 15-minute breaker. And we made this market structure change. And if you see from the higher time frame, I'm going to the 4-hour, there's a lot of liquidity sitting on the top. And we have this 4-hour fair value gap that I mentioned last week. The new week opening gap mentioned that last week. And I mentioned this 4-hour gap yesterday, saying for price to drill down even more, as we are bearish long term, price must come up to fill some sort of a fair value gap and balance this area before drilling down. And now we have just too many shorts. A lot of the people are shorting right now. So since everyone shorted, we don't have much fuel to go down even more. And market participants don't like to pay those shorts. So what they're most likely going to do is they're going to take out this highs that I mentioned here, is all these buy side liquidity, and then get them liquidated so they're out of those shorts. And those shorts are going to fuel the long buy side and push the price up to this new week opening gap, as these new week opening gaps act as magnets. And once those shorts are gone, the other market participants who actually move the market, they are going to drive the price down lower once everyone has gotten out of those shorts. And these people are going to be bullish, so they are going to be longing. And as market goes down, those longs are going to be fuel for market to go down even more. So I still think that we're going to fill this 4-hour fair value gap. Maybe I was hoping that it fills these gaps after FOMC, but we didn't. But we did take out this London high for NQ, and I was actually aiming for that move. And I will tell you where I entered my trades. So I had to wait until 2:30. Because of the news trading rule. I can't trade 2 minutes prior or 2 minutes after the news comes out. So I was kind of forced to not trade until 2:33. And here I was seeing this a lot of consolidation, and I was looking that as a sign to go up. And I wanted to wait for some sort of a confirmation. And I like how these two candles, they took out some sort of a liquidity here, took out this low, and we made this lower low, so that whoever longed here or longed here, they would have been taken out. And we have the right reasons now after we took this low to go up. But I wanted one more confluence, which was this inversion, or fair value gap that got inversed. So I was using this fair value gap, and I was waiting for that to be inversed. And as soon as this candle closed, I entered. but my fill was bad, so I ended up entering like here. But yeah, after that we had a clean move to the 930 high. 930 high. And we ended up taking London high. And I was taking partials on the way. So I took partials once we took 930 high, and then I took more partials at London high once we took London high. And we made this SMT between NQ and ES. So NQ made a higher high, whereas ES failed to do that. And that was a warning sign for me to get out of this trade. And once we took this high and then had an immediate response back to this inversion, and then we went through this inversion, that's where I exited all my positions. And yeah, that's how I executed it. Hopefully you found this helpful.